According to renowned American investor and Barron Capital Group founder Ron Barron, the market capitalization of Tesla shares is predicted to reach $4.5 trillion by 2030. He predicts a sharp increase in the price of Tesla stock in less than 3 years. In 2025, which those of us who believe this firm can transform the world can use to retire in less than a year. We'll look at Ron Barron's computation for his $4.5 trillion market cap projection for stock prices in 2030 in this video, along with his methodology and the probability that this figure will materialize. But hit that subscribe and like button before we head there. On November 4th, 2022, billionaire investor and philanthropist Ron Barron predicted that Tesla's valuation may rise by 570% to $4.5 trillion over the course of the following 10 years. He is recognized as one of the most successful investors of his generation and has over 50 years of expertise in the financial sector, according to her. Interview with Market Insider. Barron has gained notoriety for himself by making investments in rapidly expanding businesses, including some of the largest brands in consumer goods, healthcare, and technology. Now, let's get started. The stock value of Tesla, which was trading for less than $200 per share when this video was filmed, is expected to increase to $500 to $600 per share in 2025, meaning that investors may potentially profit 2.5 to 3.5 times over the next 10 years. Furthermore, it is projected that the corporation would grow 7 to 8 times faster than expected, hitting $4.5 trillion in the same time frame. Barron's bullish forecasts over the next 10 years indicate that his goal is for Tesla to sell 20 million cars annually, even though Tesla only projected 1.3 million sales in 2017. The wording used in that remark, according to Musk's business, is primarily negative, not just because it ignores our own human worries, but also because it says, let's move forward and ignore more profitable options. According to his statement, by 2030, he and Tesla would have sold 20 million cars annually for $50,000 each, bringing in $1 trillion in sales and operating profits of roughly 30%, or $300 billion in total. For example, if I use a 15x multiplier to motor vehicle sales alone and the total yearly income is $300 billion, I anticipate between 20 and 30 million autos. Let's now look at the last piece of information that, in my opinion, proves this forecast to be completely unreasonable. Robots are specifically left out of Ron Barron's predictions, preferring to focus on a time when full self-driving FSD technology is non-existent. We'll jump right to the bit where Musk emphasizes no bots, no FSD, and no batteries because of how quickly things are moving at Tesla and his prediction that robots will soon outnumber cars. The astounding results of the computations that were done are shown in this movie. Tesla's car valuation is anticipated to rise 7 or 8 times its existing worth in the future if the current stock price is taken into account, known as fast forwarding to 2030, but let's take a moment to consider our current situation and our progress thus far. By going backwards from 2030, we can calculate that $1 trillion would be made in revenue if 20 million cars were delivered at a cost of $50,000 each. Now, let's discuss the profit margin. Though it seems absurd, let's accept Barron's statement that they will continue to take and dilute your money until it is worth 7 or 8 times your original investment, or a little less than $67 per share. It's not the year 1969. By 2030, that amounts to $1,000 per share at a P of 15 and a $4.5 trillion market capitalization. Why is that? By 2024 and 2025, trading levels have not altered. Ron Barron claims that they would have greatly diluted the stock, but in my opinion, the number of existing shares will actually be declining by 2026 or 2027. And this is my meaning every year, Barron assumes a 5% dilution. Contrary to popular belief, I believe there will be buybacks and, at best, a 1%, 2% dilution. Who, after all, is going to sell Tesla stock these days? Elon is a zero entrepreneur, so if anyone is going to do it, it's going to be him, no one else will. Let's assume a $50,000 price per vehicle for the price per vehicle, but I don't think it can be that high. In 2030, the maximum cost per vehicle cannot exceed $40,000. In the unlikely event that they construct 20 million cars, closer to $30,000. With $80 billion in net income, $600 billion in sales, and a 30% operating margin, our P ratio would be 15. According to Ron Barron, the value of automobiles alone will grow to $2.7 trillion by 2030, or $600 per share. We'll learn more about the cars in due course, but for the time being, it appears more likely. Now let's go back to Barron's thoughts and try to work them out. We can compute the stock price and PS based on his prediction that it would reach $500 or $600 in 2025. AEP of 60 is reasonable if they produce the anticipated $13 billion in net profits in 2022. P can range from 55 to 65, with an average of 63. The share price would be $240 with a P of 60, meaning that the market cap as a whole is greater than $700 billion. Again, the market value of the stock should be more than the price per share. Additionally, I think that the macro environment and market mood will crush the PE when the Fed hikes rates and engages in substantial quantitative tightening. The market cap would go below $700 billion and the stock price would drop to $220 if the PE was lower at $55. However, that's overly cautious. Given that the price of shares has almost doubled in 2023, a more realistic result would be a P of 75, a market cap of around $1 trillion, and a share price of $300 per share in 2023. As an estimate for the end of the year, $300 per share might possibly be too low. Now let's discuss 2024. Here, let us begin with the initial assumption of the P of 43. The market capitalization of the stock at $434 per share exceeds $1.5 trillion. I projected a P of 37 in 2025 and received $550 with a market value of around $2 trillion. That is in line with Ron Barron's 2025 price projection of $500 to $600, or a market capitalization of more over $2.5 trillion. A market capitalization of more than $3 trillion in 2026 would equate to a $682 stock price at a P of 32. At a 27P ratio in 2027, the market capitalization would be $3.1 trillion, and the stock price would be $816. In 2028, the stock price is $843, the PE ratio is 20, and the market capitalization is $3.2 trillion. By 2029, the market capitalization would surpass $4.2 trillion, with shares valued at $979 each. When we finally reach 2030, the stock price of $1,000 per share at a market valuation of $4.5 trillion is what Ron Barron had forecast. Like every prediction, it might come true or it might not. Like any prognosis, this one is merely a prediction, so you should use caution. Ron Barron's projection heavily emphasizes the ludicrous notion that every automobile will sell for $50,000 at a volume of 20 million vehicles annually. The ridiculousness stems from the fact that most individuals, if not everyone, could not afford to pay $50,000 for a car. If they read to add 20 million automobiles annually, they would likely need to target a larger market in order to sell this many vehicles, and the price would likely be closer to $30,000. However, we should remain optimistic and examine the impact of incorporating the FSD and more improvements on the stock price. For FSD, a one-time expense of $30,000 has been estimated for 2030. This is due to the fact that in just 2 years, our income increased from $8,000 in 2020 to $15,000 in 2022. In order to be safe, I'm estimating that FSD expenses will double over the next 10 years. We don't currently have a subscription base, so I'm going to guess that 15% of all newly sold cars will have FSD. I'll be cautious and round down to 15%, even though the conversion rate should really be closer to 30%. As a result, our initial 2023 price per share of $344 for vehicles alone will immediately convert to $396 per share. Our market capitalization when factoring in FSD is $5.7 trillion at $1,267 per share through 2030. For a conservative guess, not too terrible. You just need 1,342 shares to achieve your ideal retirement in 7 years if you require the $1.7 million that is often thought to be the magic number for retirement and assume a price per share of $1,267 in 2030. Isn't that incredible? Please share your ideas with us in the comments box, and don't forget to hit the like and subscribe buttons if you like the video. I'll see you in the upcoming video too.